Hey everybody, it's James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's just after 8:30 a.m. Central Time, and we've got a little bit of a pump going on. So I want to explain what I think is happening. Also talk about some of the sentiment in the marketplace and my overall views on Bitcoin right now. So first things first, this pump was not a surprise at all. If you watched yesterday's video, you'll remember me saying that I thought it was completely possible that we'd go up and test the 50 moving average, and that's exactly what we did. We tested the 50 moving average on the daily chart. Also, if you remember, about 3 days ago in my video I talked about a potential head and shoulders forming, so I'm going to talk about that today. Alright, so if we take a look at the chart without the moving average on it, we can actually draw, this was what I had drawn a few days ago, was this, and I said that we needed to come up to 10.8 to form our second shoulder. It has now done that. So at this point, what I'm going to be watching for is I'm going to watch how it acts from here. All right, is it going to go down and confirm our neckline? Or is it going to keep going up? And I think there's some arguments to be made for either case. Let's talk about those real quick. What we need this to do is we need it to come down and actually break this line here around 94.70 to confirm that head and shoulders. But if we take a look at a 4-hour timeline, we actually had an ascending triangle over the last couple of days, and we have broke north of that. So if you draw a price target, we measure the triangle here, it's around $990. So if we have a breakout target of $990, that would actually put us up around 11,461. Now in order to get there, we'd have to break our 50 moving average on the daily, but that's not impossible, and this level does indeed make sense. If we draw a line, we can see it lines up almost perfectly with old resistance / support. So level makes total sense. If that happens, it does not invalidate my bearish views on the larger time frame, and I'm going to explain why right now. That would still put us well within this descending triangle that we've now been in really since June. Okay, this triangle, let's turn our magnet on here. This triangle looked like this for a while, and we had a false break above it, and then we came down inside of it. So that puts it right around 11.3 as the top of that triangle, but this could also be drawn like this, where the top of the triangle is up around 11.8. So both of those are valid. Okay, so on a macro level, I'm still going to be bearish even if we do go north. All it means is I might start looking for a long setup on a smaller time frame. So I might go long on a day trade if this, for example, comes down and retests this line, then puts in some structure and the setup forms. It's absolutely possible that I might take a long position here and try to scalp it for a couple of percent. Okay, so on a medium time frame, meaning like on a 4-hour chart, I do see a potential case to be bullish over the next maybe day or so. We'll see how that plays out. If it does go up to 11.5, in that case, I would feel like this head and shoulders is really invalidated, because that would put our other shoulder way up here. Okay, I wouldn't care for that a whole lot. It's not totally out the window, but I wouldn't love it. Okay, I also want to point out that this head and shoulders here, this is different from the head and shoulders I talked about yesterday. Okay, if we look at this potential head and shoulders, okay, it would end up looking something like this. This one would have a breakdown target of around 6,500-ish. Okay, so if we measure this, we can see from top to here is about $2,800. So if we copy that move, our breakout target would be down around 6,600, right? Right, pretty close to the bottom of this tail here. Also, that line was important support / resistance all through 2018. Okay, so if you saw one of the other videos, I believe it was yesterday, where I talked about the bigger head and shoulders, it had a price target of down around 4,400. So you might be asking what changed. Nothing changed, just totally different timelines. Okay, totally different timelines. This head and shoulders here is actually a weekly chart, or a 3-day chart, excuse me, but this goes way back to May. So this head and shoulders that I'm talking about here is just going to be from July 17th until now. Again, if it forms, we don't know if it's going to form yet. This one goes all the way back to May, and it has the upward sloping neckline. All right. Of course, if we form the other head and shoulders and break this $9,400 neckline, that's also going to break this neckline, which will mean this is also in play, and this one has a breakdown target of around $4,400. Okay, so both of those head and shoulders are still valid. Right now, they're potential head and shoulders. I need to be very clear about that. Until these are confirmed, they're meaningless. Until they're confirmed, they're just a bunch of squiggly lines on the chart. Okay, we have to break a neckline for them to really matter. There's lots of cases where a head and shoulders will look like it's going to happen, and then at the last minute, it just doesn't come together. So we can't get too far ahead of ourselves with that. But I'm still bearish. I do want to show you another chart here. This is actually the Binance chart, if I can find it. Okay, so this is the Binance chart. It looks quite a bit different from the charts on the other exchanges. Why that is, I really don't know. But if we look at a one-day Binance chart for Bitcoin Tether, you can see that if we draw this triangle, we have this false break above it, and it does look like we're trying to come up and test it, and that right now it is acting as resistance right at that 10.8 level. That's on a daily chart. Now, if we draw this using the candle closes instead of the candle wicks, we get a slightly different looking result that looks something like this. And that looks valid as well. It looks like it was acting as support here and then fell through it. So it could be that we come up and test that around 10.9, 11,000. Tough to say how that's going to play out, okay? But on these bigger time frames, like if we look at a monthly chart, it's a very bearish picture. I don't know why people are ignoring this. We can see that we had 3 wicks here, and if we draw a ray from this wick to this wick, we have a perfect touch, a picture perfect touch on this 3rd wick. Of course, this is the August candle, and it's just now August 19th, so we still have nearly 2 weeks, or at least a little over a week and a half before the month closes. This could absolutely go up and blast through this. That's it's definitely a possibility. But if we close this month, well underneath this, that's just a very easy to spot downward sloping trend line. All right, and of course, if we ignore the head and shoulders and we take those out of the picture and we just look at the larger time frames over on, say, Coinbase, for example, what we have is nothing has really changed. We still have a very bearish picture, regardless of what people want to say. This is bearish to me, and I'll show you why. Because if we draw a couple of rays here, there's the top trend line, and then if we draw a ray right here, we actually have the bottom support, and this is a textbook example of a descending triangle. Okay, so a descending triangle, even if we draw it like this, if we measure that descending triangle, we're going to get a price of about 4,500 bucks, and then if we move that down, our breakout target of that triangle is going to be down around $4,800. So all of these bearish patterns have very, very low targets, right? $4,400, for example, $5,200, $6,500. This one's down around $4,800. Those are all very bearish. And if we look at our trend, even if we look at a 3-day chart, all we're really doing is putting in a giant double top. Okay, we had a double top here, and now we're trying to put in a second double top here, possibly. Okay, and if you zoom out to a weekly chart, it's just one giant double top trying to form. Okay, it's only really when you start zooming into the closer time frames, like if you look at a 12-hour, that's where stuff starts to get all kind of muddled up, right? And those are the type of time frames where people are saying, oh yeah, look, we've made a higher low. I agree, we did make a higher low on a daily time frame, right? We had our our lower low, our lower high, our higher low here, higher high, higher low. So this is what they're kind of banking on, is what we're going to make another higher high here. And if we do, I would agree with him, that's a very bullish sign. If we can break upward through all these resistance levels, then yes, that would look like an uptrend to me. But right now, that's not what I'm seeing, because I have a bear bias. So what I'm seeing is I'm looking at a weekly chart, and I'm seeing this. I'm seeing here was our high, here was our higher low, here was our lower high, here was our lower low, here was our lower high, and right now we haven't yet made a lower low or lower high yet. This could come up here like this, and that would invalidate my bearish stance, or it could just fall down here like this, and that would of course be a downtrend. Okay, so basically what we've been doing for the last couple of weeks is we're just consolidating, waiting for the market to decide, is it going to go south or is it going to go north? up until it figures itself out. The only thing we can do is just play what we're given. So up to this point, I've been day trading, and today was no different. I woke up. My wife actually woke me up. She said, "Hey, your phone keeps beeping. Is that important?" And I said, "Yeah, that's pretty important." So I came and sat down at my desk, and within 2 minutes, I was actually able to jump into a trade. I went short on Bitcoin. So this was actually the trade. I didn't have time. I literally just sat down, and it was already inside of this red candle here. So I didn't have time to look at the market as a whole. I didn't have time to really, do any type of analysis on what was going on. I just knew that my setup had come in, and so I jumped into this trade right here. And rather than try to hold it for a big win, I just wanted to get in and out quickly. So I scalped it. So went short here, closed half the position here, closed half the position down here, and after fees, made a little over 0.5%, which is a hell of a way to start the day, right? So the market, it can be doing all kinds of stuff on a macro level, and down on the 5-minute chart, you can still go both ways. Yesterday, I went long from a little over 10 grand, closed that up around 10,380. And then I turned around and went short at 10.5, and I closed that down around 10.4, right? So that's just the way day trading is. But overall, not a lot has changed. The total market cap is still sitting between the 23 fib and the 38 fib. We're still inside of our rising wedge on the Bitcoin dominance. So really the only thing that I'm really paying attention to right now is the Bitcoin charts. This is what I'm watching. I want to see, are we going to confirm this head and shoulders? Are we going to confirm this head and shoulders? Are we going to stay inside of this descending triangle, or are we going to break north on the smaller time frame, on the 4-hour time frame? Are we going to come down and test this line? And if so, will I be able to find a spot to go long so that I can go long from 10.5 all the way up to 11,000 or 11,500? Or is it going to look like it's breaking down, so I'll end up going short when it gets down to this line? All those types of things are questions that will have to be answered over the next day or so. But for right now, keep in mind that we did indeed come up and test this 50 moving average on the daily charts. That's an important level to watch. If we can break above that and close, especially on a daily candle, I would take that as a very bullish sign. But don't forget that on a 4-hour chart, we actually are still sitting with a death cross. Okay, let me show you this real quick. We'll just throw a couple of EMAs on there. So if we put a 50 EMA on the 4-hour and we put a 200 EMA on the 4-hour, this yellow line crossing that purple line, that was a death cross. Okay, so that's normally a very bearish sign. Again, the last time that happened, crossing down, was back here around 10.5, 10.6. Price fell to 9,100. However, if price pumps today, or if it pumps this week, and we get this yellow line crossing back over this purple line, meaning the 50 moving average crosses the 200 moving average, that is actually what's called a golden cross. And that's a very bullish sign. You can see that actually occurred right here on August 4th. And when it did, price was around 10.9, might as well say 11,000, and it ended up pumping all the way up to 12,300. So this could pump, and this could end up being one giant bear trap, where bears started going short through here, and this thing pumps and stomps the bears out. So I will be keeping a close eye on this moving average today, because they are fairly close. One is at 10,588. One is at 10,668. So, if price moves north in a fast and violent fashion, we could absolutely get a golden cross. All right, so with all that being said, please remember I am literally some guy sitting in a spare bedroom. I am not a professional financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional financial advice before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, and also join my free Facebook group. This is James with Crypto Common Sense. Trade safe.